G'day everyone, welcome back to some Pete's Investing channel. This is looking at the natural gas and the ETFs to see where they're going. Now if you're regular to my channel, you know I've taken the last 2 weeks off, travelled around Korea and Japan for a couple of weeks. Unfortunately couldn't be able to take my equipment to do the recording, hence the absence from this channel for those 2 weeks. Thanks for sticking with me if you're a regular, and for those new to the channel, we do some analysis on medium, long-term and short-term trends and show you some back testing as well, so stay tuned for that. So don't forget to hit that like and subscribe button, it helps support the channel. So natural gas at the moment is in the short-term bearish momentum, and in terms of the outlook, as of today, May 22nd, in terms of the natural gas market and the ETFs, natural gas price remain volatile, influenced by infrastructure bottlenecks, example negative Waha hub prices due to pipeline maintenance and tight global supply amid rising demand. For the ETFs, continue to exhibit amplified short-term price movements, making them suitable primarily for experienced traders. UNG reflects broader natural gas market trends, with current prices affected by storage levels and demand forecasts. In terms of AI demand, the rapid expansion of AI data centers is significantly increasing electricity consumption, leading to a higher natural gas demand to meet energy needs. In terms of geopolitical events, geopolitical tensions, including EU sanctions on Russian LNG and disruptions in African gas projects, are constraining global supply chains, contributing to price volatility and supply insecurity. So again, we always start with the long-term trends. We've got the monthly here, the weekly and the daily. So on the monthly, you can see the CCI 150, which is our main trend indicator, is broken above the moving averages, and likewise the price is broken above those respective moving averages. And again, if you're new to the channel, these moving averages and these indicators are available in the description below if you want to watch that video. Now at the moment, bullish momentum at the moment on the monthly, although notice it's actually pulled back towards those moving averages on the CCI. It's more apparent here on the weekly. It's broken below. It had a bit of a false break there in the last 2-3 weeks ago. And again, you can see there, it's actually currently below or in that mid-range of the moving average of the CCI, likewise on the price moving averages. So I'd call that a neutral positioning. And on the daily, I would probably say that's more of a bearish momentum. We had a bit of a break to the upside here. But again, notice if you look at back here, I've got this secondary indicator here, this longer term CCI 1500 as opposed to the CCI 150. And that gives you a more smoother outlook, if you like. It's a bit of a lagging indicator. They're all lagging, of course, but this one actually comes in a bit late compared to that one. You can see it broke down earlier there, but that gives you a nice smoother ride to the upside there, and again a smoother ride to the downside if you're going short. Now again, a bit of a false break there, and it's continuing in a down momentum at the moment on the daily, even though it's broken into that moving average range on the daily. So just be cautious of going long anytime soon. Now if we go to the intraday charts, the 1 hour chart, again taking predominantly short trades here, and that's where you would have taken short positions now. What I've got as well is on all time frames, especially on the, let me just turn that off, especially on the 1 hour and the smaller time frames, you get a lot more divergence happening. Back here we had a bearish divergence, lower highs on the CCI versus higher highs on the price, and that actually pulled back. And again, I'll just draw the Fibonacci retrace. So you would have taken it from that peak there on the CCI. That would have been that point there. Take it back to the significant low. And the minimum retrace level that we expect is at 38% level of that Fibonacci range. You can see there it hit it perfectly, then it bounced out of there. Now since then, we've had a slightly lower high there as well on the CCI versus higher highs on the price. And again, if I was to draw another Fibonacci, and I would have taken that back, oops, let me take that one there. You could take it, I take it back to the significant low, but you could have taken it as well. You could have taken it back to that level there. You can see there that it broke well below that 38% level, and I don't need to draw the Fibonacci in a wider time frame. That one's actually come down and bounced off that 61%. And that's a key area on Fibonacci retraces, that's 61%. You can see that bounced perfectly off that 61%. Doesn't always do that, of course. Now, in this case, it could have bounced off at any one of those Fibonacci levels, or it could have actually kept dropping. Now, at this point, following the daily trend, I would suggest be careful about going long. I wouldn't be going long. We also had another bullish divergence here. I don't trade these divergences. I look at them as opportunities to get out of the trade. So, for example, if you're going long during this period, I'd stay in a trade so long as the price is above the moving averages on the price chart. And as soon as you see a bearish divergence like that point, you can see there the price and the CCI dropped off together. Normally you want to see the CCI moving in tangent with the price, with the exception of these bearish divergence or bullish divergence you can see there. So as soon as it starts falling off along with the CCI, that's where you would have taken your profits after seeing that bearish divergence. Now here, you wouldn't be going long because the daily is not long, but again, you expected a bounce here with that bullish divergence, higher lows versus lower lows on the price, and that actually broke up. If I was to draw a Fibonacci to that level, you can see there it broke just above that 61% and pulled back down. It's currently hovering around the 50%. So it could go either way from here. There's no guarantee of up or downward momentum, but you can see there's a slight bullish move on the CCI, and it's pretty much flat at the moment on the price. Now if we go to I've got some back tests here, and I've started this back test here from when the price broke above on the daily, broke above the CCI, and the CCI broke above there, and the price also at that point, and that was on the 29th of April at this point here. So the top back test here is the stop loss approach, and the bottom strategy is the average down approach. So basically whenever the price breaks above the CCI and the price, you take a long position and you close it out when you take a 3% or 0.003% if it's intraday, take profit, or a 0.005% break below, you take a stop loss. So you can see there, had you held that position throughout that whole period, you would have gotten out ideally when the CCI on the daily broke into that moving average range, and that was around this area here. So you would have got out with a small profit there on the stop loss approach with about $235, and on the average down approach that would have been about 9,590 because you averaged down a few times there and that boosted your profits. Now you wouldn't have, even though it closed out there, I advise strongly against staying in the long positioning there. Take your profits off the table, especially after seeing this bearish divergence we talked about. So as soon as you see that, especially if you're trading, take your money off the table. Now again, I don't go long during this period because the daily hasn't broken above the CCI, nor the price is above, but the CCI is still somewhat hovering in that range, and it could actually fall off again. Likewise, the CCI 1500 down here on the daily, it's still in a downtrend, so just be cautious about going long. Next we look at BOIL, and on the monthly it's still in a pretty strong downtrend. There's no CCI for it on the monthly. On the weekly, that's also broken below the moving average of the price chart. But notice here we did have this bullish divergence on the CCI 150 starting back in 2023, and that's been a very long play with the price declining, and it finally bounced there end of last year and broke up through the moving averages of the price, and the CCI kept rising, and it's still rising, although the price is actually broken below the moving averages. So avoid going long if you're trading on the daily. Remember, with the trading strategy, we always trade on the higher direction of the higher time frame. So if you're trading on the daily time frame, you take the direction of the weekly, and so on. And I'm demonstrating the back testing on the 1 hour time frame, which is the direction of the daily. So here on the daily, again, we've got a break below the price as well as the CCI 150. The CCI 1500 is actually pretty much flat. It's showing a bullish move, but that could be a very lagging, slow bullish move. If this continues to the downside, we're going to see that break further to the CCI 1500 break further to the downside as well. So we primarily look at the CCI 150 in this case. So again, short only if you're trading on the intraday. And if you go to the intraday charts, so you can see there you would have started going short back there on the 15th of May. That would have been this period back here when the CCI 150 also broke below on the 1 hour time frame. Now in this case, there was no divergence back here. We did have a divergence here before our last video, a bullish divergence, and that actually broke up and broke through our 23-38% Fibonacci range. We had and always mark these ranges with little rectangles whenever they get breached. Now since then, the CCI has been moving in line with the price, so there's no divergence to talk of, and at the moment the CCI on the 150 on the 1 hour time frame is turning bearish, and we may see this fall further on the daily. Now if we go to the very quickly on the 1 hour time frame, the back test, and what I've got here, trading on the $1,000 lots, so you would have gone short when that broke below on the daily there. If you're trading on the 1 hour, and that would have, on the stop loss approach, that would have generated about $129, trading $1,000 lots, and the average down approach you would have generated up until that point, the same period, you would have generated about the same amount It's $115 actually, so it's actually dropped off because of this little spike above. Now this hasn't actually averaged down much, so at the moment that average down is still in place. So if that drops off again, you may see further gains for that strategy on the average down approach. For KOLD on the monthly, that's broken below the moving averages on the price. The CCI 150 is not really drawn that well, but it's actually showing a bearish momentum, so bearish on both the price and the CCI 150 on the monthly. On the weekly, it's actually a slight break or into that moving average range on the CCI, so giving us a neutral positioning. Likewise on the price, had a bit of a bounce, a false break to the upside there, but notice the price is still below the moving averages, so you would not really have gone long at that point. On the daily, that had a bit of a gain above there, but again you wouldn't have gone long yet because the weekly was showing you a neutral positioning. And at the moment, if that breaks above on the weekly, then we go long on the daily as well. But at the moment, there was a bullish divergence here versus lower lows on the price. It bounced. That looks like it just hit that target there, possibly, or just kissed it before our last video. And since then, the price is moving in line with the CCI. On the 1 hour time frame, again, the bounce is there. There's no bearish or bullish divergence. So you'd be going at this point. If that continues to the upside on the daily, we take long positions only, and that hasn't broken above on the CCI nor the price yet. So just hang off going long until we see that break above as well. And lastly, for UNG on the monthly, it stuck its nose above the moving average on the price there, but it's finally fallen below again, and the CCI is still above its moving averages. So giving us a mixed signal there, somewhat bearish on the price, but I would call that maybe a slight bullish move on the CCI. It's hard to tell if that could actually be a bullish divergence. You can see there double bottom on the CCI versus lower lows on the price. Now, if that's let me just expand that a bit, have a better look at it. So we take it from the very low there onto the Fibonacci range to the high. And if it does bounce, we expect it to hit, if this is a bullish divergence, we expect it to get up to this range here. Let me mark it for future reference. This could take months actually to play out, so there's no mad rush for it. But that's where I'll draw the target for now. It looks like it's pulling back, but that CCI is still above the moving average range, which is still bullish on the CCI, but somewhat still bearish on the price. So again, neutral positioning on the monthly. On the weekly, that's still bearish on the CCI and bearish on the price, broken both below the moving averages. And there was a divergence on this one, lower lows on the price versus higher lows on the CCI there. That actually bounced, and that could have completed its bullish divergence. On the daily, again, that's bearish on the price and bearish on the CCI, with the CCI 1500 also showing a downtrend. And again, that CCI is moving in line with the price, so there's no divergence there. There was a bearish divergence back here, and that played out right down, broke right through our initial target range. And it looks like if you pull this Fibonacci back to that level, that would have been a 100% retrace on that level there. And if we go to the intraday charts, the 1 hour, we take predominantly only short trades with the CCI below the moving average. And that would have played out for this little period back there. Now it's finally broken above the moving average, a little bit of a false break there almost on the price and the CCI. But notice it's actually just starting to break below the CCI to the bearish momentum at the moment. So could possibly, I'd like to see this break below the price as well, the moving average, to be more confident of a bearish move. But that could be the start of a bearish move to the downside as well. Now if we go to the intraday chart, look at the price at that point there. That's where the daily broke below the CCI at the 15th of May. That was around this period back here. The stop loss approach has generated about $22, and the average down approach still in play, generating $19 for $1,000 trades made. So again, that could break further to the downside, in which case the both will enter. So I'll keep an eye on that and see how that goes. So if you're new to trading, we're now including a weekly video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. And if you enjoy the content and help keep me motivated to keep doing these videos, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me with a cup cup of coffee. Thanks, and talk to you in our next video.